Nike is #1 for the youths out there. That's according to Piper Sandler's teen survey out today. While Nike is the top brand across all of apparel and footwear, it's still losing share in every category. So to break down how retailers are keeping up with the kids, we've got Abbie Zvejnieks, Piper Sandler's vice president and senior research analyst. Abbie, it's great to have you to chat about this. Thank you for being here. I'm constantly surveying the teens by our office to find out what sneakers I should be buying, but I'm curious about this survey from an investor perspective. What is the single most important thing that investors should know from this teen survey?
I mean, I think that from a brand perspective, it is interesting that Nike is now losing share across all categories. We started to see this with athletic footwear first, and now we're seeing it across footwear, across apparel, and it's a byproduct of the lagging product innovation that Nike has addressed. So, the positives we see on this front is that On Running and Hoka are gaining a ton of share in athletic footwear. New Balance is gaining a ton of share in more fashion lifestyle footwear. So there are smaller brands that are taking this share from Nike. And I think that, one thing that we've also identified here is that there's this focus on, silhouettes versus brands that we're seeing. So, teens writing in Dunks instead of Nikes, writing in Sambas instead of Adidas. And, I think this is this shift that's actually creating these, more, fast trend cycles.
What do you think, Abbie, then that tells us just about what the focus is going to be for Nike just on certain products moving forward? And you mentioned the fact that part of the reason why it is losing market share is it's lagging a bit on that product innovation point. So are they going to stick with what's working when it comes to the Dunks, or do you see them placing a larger focus on some of that future innovation in order to try and win back that lost market share?
Yeah, it's a great question. I think that, what teens are responding to right now is newness and innovation. So, they've actually, Nike has said that they're pulling back on, core styles like Air Force One in favor of new product, something like the Air Max DN, which just came out recently. They're also, pivoting the strategy to, be a little bit more friendly towards the wholesale channels, have broader product distribution versus just going direct. And so, I think they've seen where they've lagged on product is on that newness piece and just leaned into some of the core styles that were working. So we should see a shift from them.
Moving away from the sneaker space, I want to get your take on Lululemon, because I know there was a price target change from $525 down to $470. What is your take on what Lululemon would need to change in order to turn things around here?
Yeah, I mean, I think it's less of a turnaround and more that we're just seeing that there was, a huge influx of teens into the brand over the last 2 years. So just to put some numbers behind that, the last 2 years, we've seen 11% of upper income female teens saying that this was a new brand that they were wearing. That number is now dropped to around 8.5%. So I think that new customer acquisition just gets more difficult. And what I think, Lululemon is doing well is, they are keeping up with product innovation. I think, some have equated this to other athletic brands that have struggled in the past. And, the main common denominator there is a lack of focus on that product innovation. So we think Lulu is staying, very relevant within performance, but these teen consumers just tend to be fickle. And so we're lowering our North America growth estimates there.
Abbie, what did you see overall just in terms of teen spending? Have we seen it contract just a bit compared to previous levels that we saw in past years, given the fact that inflation remains much stickier than many had anticipated?
Yeah, so spending did decline 6% year over year. And, some of the main categories from that were apparel, which was down 4%. Footwear was down 1%. Some categories that were, more resilient were beauty. But yeah, I mean, we're well below some of those pre-pandemic teen spending levels, above trough pandemic spending levels, but definitely seeing that teen consumer, hit by things like inflation and just lower confidence in the economy.